Hi everybody, welcome to another update on the stock screener. Today I'm going to make a video on bond yields and how they affect your investment. So let's say you have $80 million of cash. What are you going to do with that $80 million? Either you buy Soma Gold, which has an enterprise value of 80 million. So I use my cash and I buy the whole company and see what happens. All of these cash flows that come in, how much do I end up with after 8 years? Or you can use this $80 million and buy bonds at 4% and see how you end up there. So let's calculate those two scenarios. Let's first do Soma Gold. So the first year, I would just get 15 million, right? The second year, I will get this cash flow plus, of course, 4% on the money that I got here, right? So that's the second year. That's the cash flow that comes in the second year. So the third year, how much money do I get? I get, of course, this number plus 4%, because that's the rate. 4% on this cash flow plus this cash flow, right? So I got these two cash flows in the bank and I get 4% on that. I can lend it out for 4%. And I also get this amount in the bank. So that's the cash flow for 2025. How much do I get in 2026? I get this cash flow plus 4% of this plus this plus this, right? Because these were my cash flows, these are in my bank, and I can get another 4% of that this year, in addition to the cash flow that I get in 2026. And we're going to continue doing this, is this plus 4% times this plus this plus this plus this. Okay, and this will be this plus 4% times, I wonder if I can use some of this. Never tried it, but let's see. Oh, it works. So I can just do that. This is this plus 4% times sum of this, and this is this plus 4% times sum of this. Okay, so these are the cash flows that come in those 8 years. And total is the total is sum of all these cash flows. So at the end of 2030, I just close the mine. So I will lose my 80 million, of course, because I cannot sell my depleted reserves, depleted mine. So that 80 million is gone, right? I won't get that back unless I can salvage the equipment, or I don't know. I don't think you get a lot back at the end of the mine life. You need to close everything off. But I do have $336 million in the bank. So I turned 80 million into 336 million, right? Let's put that here and make it green. So what's the return? That's this divided by this. So that's a return of 4x. Yeah, this is just a number. So a return of 4x of my money. Okay. Now let's do the second scenario. So in the second scenario, we start with $80 million. Then I get 4% interest on that money, right? 4% on that money. And this plus this. Second year, I will have this kind of money, 8.383 million, right? Well, I could do this like this, of course. That's the first year. First year, I get 83 million. Now for 2024, I have interest of 4% times this, right? And then I do this interest plus this. So I will have $8.86 million. Okay. I think I can just drag this to here. Apparently not. Let's see what happened. Oh, okay. I need to do F534 like this. And then I can drag this. And this is this plus this. This is this plus this. Okay, I think we're correct here. So at the end of the day, at the end of the 8 years, I will get this number, 109 million dollars, right? 109 million dollars. Let's make that green. And the multiple is this divided by this. That's the multiple, 1.36. So I got a 40% return over 8 years. That's not a lot. 40% only. That's correct, right? Yeah, it's just this plus this. And this is 4% of this. Yep. So basically, it's much more profitable to buy Soma Gold because here you 4x your money, 4x, and here you only have 36% upside. Now, what happens when bond yields rise? So instead of 4%, now we have the debt implosion in the system, and bond yields rise to 10%. Then what happens? This changes, of course. These numbers change. And this is the number that changes. So let's put this here. And you can see already that my bonds are going up in value from 109 to 171. And this is going up as well from, what's this, 336 million to 400 million. But still, Soma Gold is still more valuable. Okay. So let's put this number here. Make it another color. And let's put this number here. Make it yellow. And our multiple is now 2 times. So we have doubled our money with the bonds. And here we have actually 5x our money. So here it's even higher, right? And that's because of the compounding effects of interest rates that we get each year. Let's say we go to 20%. Who will win then? Here we get 340 and here 550. So, yep, let's paste it here with another color. And the multiple is this divided by this. So here we have a multiple of 7 now. And here we have a multiple of 4. So the bonds are starting to win, right? The bonds are starting to win. We now have 4x our money in 8 years. But here we still have 7x our money. So Soma Gold is still good at 20% discount rate. Let's go to 35%. What happens then? Do you see it already? At 35%, we get 900 million. for Soma Gold. Let's make this red. And here, look at this. We similarly have 900 million. So this is this divided by this. And this is this divided by this. And now you can see clearly that bonds and equity, so bonds, these are the bonds, will give you 11x in 8 years. And here you get also 11x in 8 years. So at 35% discount rate, you can choose between the two. Now, the clue of the story is the NPV now. Look at this chart. What do you see here? You see here that the 80 million enterprise value is equal to the end NPV. So the end NPV of accumulated cash flows is also 80 million. Okay? So that's important. What's this? Yeah, this is 10%. It should be 35% now. Okay, so 35% NPV gives me, yeah, the 35% discount rate of all these cash flows, yeah, gives me a value of 80 million. And that's this 80 million. So what does this mean? Because this is very important to understand. If the world has 35% interest rates, right? If the world has bond yields of 35%, then the value of this company, Soma Gold, is worth 80 million. Okay? It's worth 80 million. Because 80 million is equal to the end NPV of this project at 35% discount rate. So 80 million, and the enterprise value is also 80 million. You see this? 80 million enterprise value is the same as the NPV of the project. That's fair value. Why is it fair value? Because you can put your money in Soma Gold with 80 million, or you can put your money in the bank at 80 million and get 35% each year compounded on the bank just by government bonds, right? And then you will get the same return at the end. So this is how you evaluate your companies. This is how you evaluate it. What is my discount rate? And what is my NPV at the end of the 8 years? Right? So if I put this back to current 4%, then what is actually the value of Soma Gold at 4%? Because today we are not at 35%. Bonds are not at 35%, they are at 4%. So what is actually the real value of Soma Gold? It should be here, 250 million, because that's the end value of this NPV calculation. If I take discount rate of 4%, which is the bond yield today, that's the return that you can get when you put your money in the bank, then the NPV is 245 million. That's here. So that's actually the upside for Soma Gold. Currently, our enterprise value is 80 million. It should be worth 250 million. That's how you need to see it. Depending on bond yields, you have a certain value for this company, which is 250 million. And how much is that? That's 3x. That's what I said. This company is worth 3x, a triple, if they can achieve what they say. If they can achieve consistent 50,000 production at AISC of this, and if the gold price stays above 2,000, and when they produce another 80,000 in those last 3 years. Of course, they can keep producing in the coming years, and then the NPV will be even higher. So the value of Soma Gold would be higher at the 4% discount rate. Of course, it can also go the other way. Let's say that this company cannot increase production anymore, and they will be depleted in, let's say, 1, 2, 3, 4, 5 years. So let's say we cut them off here. Delete. Then the value of Soma Gold is only going to be 140 million. So a double worth based on a 4% discount rate and current EV of 80 million. Of course, this is not going to happen. They are going to find more resources and we get a higher value currently. Okay, so this was the video, and this gives you a view on how to look at NPV in function of discount rates. Do you choose to put your money in the bank at 4%, or do you choose to buy Soma Gold, where you have an upside of triple based on the end value of the NPV calculation? Think about it, and I'll see you in the next video.